Hello greetings student. So in this video I'm going to do a income statement, which is also known as comprehensive income statement, or you can call it a profit or loss statement. Okay, so let's look at this question paper that we have. Okay, they say Kingston Traders information related to financial year end 29 February 2020. Goods are sold at a markup of 40% on cost. Once they give you that statement on top, guys, just know that it's going to affect this first part of income statement. Remember, as I said on the previous video, guys, you need to know the format of income statement. This structure is a skeleton. You need to know it. No one is going to teach you a skeleton. A skeleton, you need to sit down, guys, and cram with understanding that, okay, under income statement, we start with sales, we go to cost of sales, we get a gross profit, and after that we go to other operating income and we list them, operating expenses, we list them, then we go to the last part of operating profit, interest income, profit before interest expense, then the last one is profit for the year end. You need to know this format, guys, before anything else. That's the format that you need to know. Okay, so now let's go back to this question paper. Remember I said that if they give you a markup, just know that there are some calculations that you're going to deal with. Okay, required, prepare income statement or statement of comprehensive income, okay, for the year end 29 February 2020. 45 marks. 45 marks. Imagine. That's a lot of marks. Okay. Then they give you a pre-trial adjustment for 29 February 2020. Start from capital until a bad debt. But remember, a major amount that is going to affect the income statement is start from sales. Even on the trial balance, it starts from sales. Even though interest income, interest expense, something like a bad debt adjustment, it may also require you to go to balance sheet section. Okay, now let's first focus on this part. Let's start from sales. A sales amount that is given here, guys, you can see that is 950,000. Okay, the first things that you need to do before you even rush here, open a bracket and say 950,000. And check if you have any additional information which is going to affect our sales. If there is none, now you can go back and subtract debtors allowance. Debtors allowance is a return, customer return goods. We have to subtract because it's no longer sale. Customer have returned those goods. Okay, at transaction number 1, they said cash sales of 18,200 on 29 February 2020 has not been recorded. It was not recorded. We have to add it. This sales was not recorded, 18,200. Then after that, we can go and subtract our debtors allowance minus a debtors allowance of 14,000. 14,000. Why did we record this 18,200 as it is under sales? Because it's a selling price. But when we go to cost of sales, we have to apply a markup and add it as well, because once you sell, a cost of sales must also affected. It must also increase. Okay, our cost of sales under trial balance is 400,000 plus this 18,200. You must first convert it into what? Into cost of sales using a markup. Because we are going down to cost of sales, we're gonna say 100 on top, and it's always 100, guys, plus a markup of 40%, which is going to give us 140. 140. Then our cost of sales will be amount of 13,000. 13,000. We convert this into cost of sales, just like that. Okay. Now let's calculate a total here, 954,200, and we subtract 413. And after that, a gross profit this one minus this one is gonna give us a gross profit of 541,200, just like that. Okay, then other income, other operating income, this is the total. I was supposed to draw a line like this. Then this one that you see here, guys, it was given on the answer book. Okay, now let's move on to the next one. We are done with this first part. Now we are going to look at the operating income and expenses at the same time. Okay, now from debtors allowance, we found a salaries and wages, which is 168,000. Salaries and wages is under expenses, 168,000. Okay, and the next one, guys, you just gonna, now you are going to take all income and expense and you just open a bracket and you write them here, 1 mark, just to copy and paste, 1 mark. Then next one, fee income is here, and the amount of fee income is 82,600. okay, and it's 1 mark, just 1 mark. Just know that all amount that I'm writing is 1 mark. Okay, the next one, interest income, 900. Okay, and the other one, consumable store, 5,500. Consumable store is here, 5,500, 1 mark. Okay, and the next one, rent income, 39,000. 39,000 is before you even read your transaction, 1 mark, another mark. Okay, then interest on fixed deposit is part of interest income, which means that you are going to add 1,870. Okay, and the next one, discount allowed, it was recorded, there was no mark. Discount received was recorded, no mark. A telephone, 9,200. Where is telephone? Where is telephone? Telephone is 9,200 under expense. Telephone, we open and you see 9,200. Okay, and the next one, stationery. Stationery is here, 8,800. Okay, and the other one, insurance is here, 16,800. And the other one is bedded. The last one, bedded, is how much? 1,300. You already in a lot of marks, guys, just to copy and paste those amount. Now moving forward, let's check. We are going to transaction number 2 because number 1 we already covered it on top. They say a fee income of 2,400 is still outstanding for the period. If they say it is still outstanding, which means that we have to record it. It's not yet recorded. Remember, the major purpose is to make sure that we record everything, whether it's paid or not. It has to make a 12 months. And we have to make sure that we record everything that belongs to our reporting period. Our reporting period is ending 2020 on February, which means that after this, we don't record. Anything that has been paid after this, we don't record. We have to subtract them if it has been recorded. Okay, we have to cut off until 28 February. From 1 March 2020, no, it does not belong here. We subtract. This one is still outstanding. It's a fee income. We have to add it. It's how much? Fee income is 2,400. 2,400. We have to add it, and it's gonna give us how much? 85,000. 85,000. Okay, and the next one, insurance. They said insurance include monthly payment up to 30 April 2020. You see now, our cutoff is 28 February, but they recorded March and April because they said up to April, which means that they added 2 months, which does not belong here. Where is insurance? Where is insurance? There it is. We have to subtract those 2 months. How do we find those 2 months? This 16,800, guys, is for 14 months because they also added 2 extra. Normally it's 12 plus extra 2 is 14. If you say this one divided by 14, you're gonna get amount of 1 month, which is 1,200. 1,200, we have to subtract it twice. Why? Because the other one is for March, the other one is for April, because they recorded up to April. And you're gonna get amount of where is it? Insurance. Let me check my calculation. 14,400. Okay, as long as you understand the principle, guys, because it can happen that this calculation I already calculated them, which means that I can do a mistake like this. You find that I recorded it under some way. Do your own calculation and make sure that you verify. If you find a mistake, just listen to the principle. Don't tell me on the comment section, Uri, hey, say you did a mistake, because this video is not going to be repeated again. Okay, just make sure that you recalculate your things properly and make sure that you follow the procedure and the principle that we are teaching you, because that's the most important part. Okay, now moving forward to the next one. One employee I-Cool has been left out of the salary journal in error. Okay, and they said the detail of the salary was as follows. They didn't give us a gross salary. They gave us net, pay as you earn, UIF, and pension fund. Okay, this salary was supposed to be added. It was left out, which means that we have to add because it's for this year. So what do you do now? Which one do you add? UIF, pay as you earn, or net salary? You add a gross, which means that you have to add all those amount, 7,300, 2.2, 400, and 100, which is going to give you 10,000. Then it is gonna give you 178,000. Okay, and the next one, depreciation on vehicle is 32,000, equipment 17,100, must be written off. We're just going to add those two amounts. Depreciation is an expense. Okay, you're gonna add 32,000 plus 17,100, and it's gonna give you 49,000. What is it? 49,100. All right. Then we are going to the next one. The next one, they said that interest on loan for the year amounted to 30,800. Interest on loan is interest expense. Interest expense, and must be written as a bracket inside the brackets. 10,000, 30,800. Okay. Then the other one, they say the bad debts of 700 must be written off. We are just going to add, where is bad debts? Plus 700. Okay, it's gonna give us 2,000. And the other one, rent was received for 13 months. Is it correct to receive rent for 13 months? No, we have to receive for 12. One must be removed. How do we remove one? 39,000 divided by 13, and you're gonna get amount of 3,000 of 1 month, and you remove that 1 month of 3,000 and you get 36,000. Just like that. Very simple and straightforward. So the next one, before we go to the next one, guys, those who want to attend our extra class, please make sure that you contact us as early as possible. Now we are offering a different subject, guys. When you come, please specify that this 100 Rand is for economics, this 100 Rand is for accounting, is for maths literacy, and so on, so that we can add you to a correct group and you learn with other students. Now we are attending twice, guys, because we have increased the price to 100 Rand per month. You attend twice every week. Okay, and also before I forgot, guys, a study guide for grade 10 is available. It took very long time due to a process of editing, verification. So the study guide that we have for now is only soft copy, which is costing only 100 rand. The reason is because, guys, we did a lot of quotation. We want to print it out so that you can get a hard copy. It's very expensive, very, very expensive. So we don't want you guys to pay a lot of money for now. Let's just be patient and buy a soft copy, which is take a lot of time for us to build it up, to make sure that we simplify for you, and so on, so that you can practice and get more knowledge. So the study guide is available now. You can contact us on WhatsApp. Okay, now the next one, a physical count of stock revealed the following stock on hand. Training stock of 220 and unused consumable stock is 500. Okay, now let's start with a consumable store. Consumable store on hand that we have, guys, we have to subtract. We have it on hand at the year end, which means that we are not going to use it for this year. We're going to use it next year. We have to subtract it. It does not belong here because it's going to be used next year. Minus 500, which is going to give us 5,000. Okay. And the next one, trading stock surplus, which sometimes it can be deficit. Okay, but in this case, it was a surplus, and I will explain why. At the beginning of the year, we have a trading stock of 231,000 stock, and during the year, there is a stock which has been sold, which was not recorded, which is this one, which means that it was already out, minus 13,000. So if you do this calculation, okay, let me calculate so that I can explain properly. 231,000 minus 13,000. It was 218,000. If you subtract these two, you're gonna get 218,000. And at the year end, we found that our value of stock is 220, which means that the value of the year end, it was more than this one, which means that it is more like what is a profit, because the stock reveal what a higher amount. If it reveal the less amount, it's a deficit. Okay, so now we get a surplus, and now we have to minus 220 so that we can see how much surplus. It's gonna be 2,000 surplus. Okay, then after that, guys, you need to calculate your operating income, which is going to give you 123,888. Okay, and all your expenses, which one we didn't close, this one is 9,200. Okay, you need to verify on your side, guys, as well. Expenses, this side will be, you just add all this amount and you will get, okay, well, 178, 14,400, 2,000, 5,000, 49. Okay, it's gonna be 258, 560, 258, 560 plus 9,200, and it's gonna be 267, 760. Okay, then after that we have to determine, okay, this one is operating expenses, 267, 760, and this one gross operating income, guys. You just need to add this one plus this one, which is going to give you, I think this one I already calculated it. Let me check. It's gonna give you 6. It's gonna give you 665,030. Okay, then after that, this one minus this one, and need to calculate 665,030 minus 267,760, which is going to give you operating profit of 397,270. Okay, then interest income, we're going to add it, which is how much? 277, and this one is positive, guys, because it's income. Okay, then which means that we are going to add 2770, which is going to give us 440. Okay, and the last one, you subtract interest expense of 3,800. You're gonna get 369 240. Okay, this is 240. Okay, that's how you do income statement, guys. I hope you learned something. Please, guys, I know that some of you haven't subscribed to this channel and you are delaying yourself because some of the video are not going to appear on your playlist of grade 11. So make sure that you subscribe so that as many as possible video can appear on your side as well, because some videos are made for public, some videos are made for subscribers, some videos are made for members. So make sure that you subscribe, and also if you can afford membership, just join a membership so that you can also watch more special video that I did for you. I'm gonna see you on the next one.